entirely different. Even though news flow has been constructive, markets are looking tired, pockets of cracks have opened up, and for sure high beta stocks have reversed. So after yesterday's reversal, how should traders trade in and out of Indian markets? Let's discuss that with Mitesh, because Ashwini will be joining us a little later in the show. Mitesh, first the big picture. This week has been a rather non-inspirational week for Nifty traders. Nifty has exhibited a lot of back and forth action, and we've seen extreme volatility on both the ends.
Well, yes, morning, that's correct. I think, see, one of the key principles of technicals which we follow is that, you keep looking for confirmations at higher levels, or you keep looking for confirmations of the trend which is undergoing. Now, we have seen a pattern of higher highs being established regularly as the market continues to move up. But I think this time, when the market kind of managed to get past 60-30 and made an intraday high or intra-week high, rather of 60-70, I think for the first time there was some kind of a non-confirmation, in the sense that a lot of technical indicators failed to get past the earlier highs. This is called as divergence or loss of force, loss of momentum, as you can understand it. It's clearly visible in the market as well. I think this will, possibly suggest that there has been some kind of tiredness in the trend. Now, this does not indicate a reversal, but I think clearly at higher levels, there is, a situation when profit booking or positions are being lightened. So I think that clearly suggests you that, yes, in the next few days, I think the idea should be to take profits on your existing long positions. Wait for some kind of a minor breakdown to happen. Now, this entire situation which I have talked about has happened on the short term and the intraday charts. So we are not looking for big corrections, but I think once we start trading below 5990, there's a good chance that we will slip back into the range which the market displayed in the month of December, and possibly a retest of 5870, 5850 could happen. Gives you roughly about 2.5% kind of downside.
Mitesh, what trading ideas then would you recommend to the viewers today?
Well, I've got a sell on Aurobindo Pharma. Now, it's a slightly conditional sell in the sense that I would wait for the intraday swing of 184 to be broken. So sell below 184, keep a stop above 190. Look for target of 172 to about 170 on the downside. Century Textiles similarly can be sold. I think today SGX is showing a minor positive this thing. So if the markets cap up around the levels of 417 to 419 would be good levels to short Century. Keep a stop above 425.5 and look for a price target of 405. Possibly even 385 can happen over here. Dr. Reddy's is a stock which has kind of shown a lot of strength and momentum in the last few days, continues to make newer highs. Now can be bought with a stop at 1909 for a target of 1970. IGL, Indraprasth Gas, had a very strong price and volume action day yesterday. Can be bought with a stop at 256 for a price target of 275. And I think, amongst the major components of Nifty, I think it's the CNX IT which continues to show and display strength in the short term. So I picked up a TCS which can be bought with a stop at 1329 with a price target of 1385 in the next few days.
Reliance, Mitesh, that stock exhibited a lot of price action yesterday. Do you think Reliance is now looking strong for another 20 rupees? And irrespective of the market curve, Reliance could move independently?
I think there is a strong chance of that happening. Now, I mentioned that CNX IT was one of the indices showing strength. I think apart from CNX IT, when I was looking at the various indices on the NSE, I think only CNX Energy is the other one, which is possibly having a stronger pattern. Reliance, of course, forms a key component along with ONGC over there. Now, speaking of Reliance, I think I'm waiting for the stock to break past earlier highs of 870, 875. That will kind of confirm that the up move is likely to extend, and then I will look for target of around 900 to about 910 on the upside. So 870, 875 is the earlier high, some kind of pivot point on the weekly chart. So I think as a trader, if you're trading on leverage side, wait for that level to be cleared off, because market is slightly choppy. Once it does that, I think a 25-30 rupee move can smoothly happen over here.
Mitesh, what about the reversal in metal stocks? Metal as a category, it has exhibited momentum of late, but this week most of the metal stocks, again, they are gaining less and they are falling more, which means they are making lower tops.
That's correct, Nikunj. I think, while the medium-term charts, were showing some kind of strength, and we saw excellent outperformance by metal stocks in the month of December, I think in the short term, it's clearly a situation which is very similar to what I've spoken about the Nifty. A lot of negative divergence at higher levels on the intraday charts. I think it suggests that one leg of the up move has been done. I think a pullback to the short to medium term averages is on the cards. I think once that happens and we saw some kind of stabilizing at lower levels, I think I would definitely want to look into this space, because my sense is that with these stocks, which have been declining for the last few quarters, I think are very close to forming important lows on the weekly and the monthly charts. So for Hindalco, I think I would wait for a price target of 115, sorry. Similarly, as Sterlite, I think around 110 would be very interesting to look at. But in the short term, yes, the pain is there. So my sense is that they are going through a correction.
And HCL Technologies today from the IT pack, as well as corporate news flow on the stock.
Yeah, so numbers are of course important. The bar has been raised after what TCS and Infosys has indicated. In terms of delivery, yes, HCL Technologies, they are expected to come out with good solid numbers. HCL Technologies in last 2 years, it has been a marked outperformer. Their manufacturing infrastructure vertical has done rather well. The key hallmark for HCL in last 2 quarters has been that in a tough environment, they've managed to grow at a run rate which is much higher than the industry average, and the operating profit margins still about 2 years ago, which were languishing way below 20%, now are way above 20%. This time around, since Q3 will be a difficult quarter, Q3 historically is a slow quarter of IT companies, sequentially we may not see uptick. But the other big issue for HCL Technologies is that we really could have a change of guard. So Vineet Nair could step down as the CEO. We could have a new man in charge. And historically, we've seen that the change of guard always has impacted the business in the near term and in the short term. And I'll give you 2 very good examples here. These are not historical examples, but very recent examples. When Chandra took over from Mr. Ramadurai, TCS really emerged as the emerged as India's #1 IT company, and they rediscovered a lot of aggression. Similarly, when SD Shibulal took over from Chris, there was a vacuum there, and Infosys, we know that they have lost a lot of aggression, and the stock has been a marked underperformer. Now, Vineet Nair is one person who, to my mind, is really or was instrumental in HCL Technologies turnaround. 3 years ago, 3.5 years ago, HCL Technologies was struggling. They made one acquisition, they had a mixed strategy in place, but then Vineet Nair took in charge. He focused on the manufacturing vertical, the infrastructure vertical. He became very aggressive in the BPO space, and he really was able to turn around the entire DNA of HCL Technologies. I'm sure the transition will be smooth, and that is what we'll get from the management today. But we should not undermine the importance of the top man, because we've seen, in the recent past that it's the top man which will decide what the company will do in next 2 or 3 quarters.
Oh yes, HCL Tech is going to be the stock to monitor and trade today. But what about commodities? Manisha is here to tell us about all the cues this morning. Manisha.
Well, thank you for that, Aisha. Let's start with the crude prices first. And while the NYMEX is still holding around that $94 per barrel, which is a 4-month high, you have seen the Brent crude prices decline below $110 per barrel. The NYMEX is trading slightly on the higher side because there's a surprise decline in the US weekly inventory data, and that has been supportive for that space there. If you look at the energy product, then the natural gas prices also have declined ahead of the inventory report. Markets are expecting a jump up in the inventory numbers there as well. The gain, though, has come in case of the gasoline prices. You have seen strong demand continue in China in that space there. To the base metal space then, and you have seen profit taking continue for a 3rd straight day into that one. The copper prices are trading at a 2-month close on.
Forgive me for interrupting you there, but I need to interrupt you there. HCL Technologies, we were discussing those numbers, expectations, and numbers are there on your screen. Q2 PAT is at 724 crore. It in our poll was at 825. I really hope that these are a consolidated set of numbers.
I think these are the standalone numbers.
Okay.
Yeah.
Simple rule, which we always mention when HCL Technology numbers, they come out, never react to the first flash. Because if these are consolidated set of numbers, then they are ugly set of numbers. So these are standalone numbers. We'll wait for the consolidated numbers to come out. Okay, we're just verifying that. 724 standalone numbers. These are honestly meaningless numbers, because HCL Technologies, unlike TCS and Wipro or Infosys, they have multiple subsidiaries. So it's always the consolidated number which really matters. So
but it's a disastrous set nonetheless. Even if you were to go by the standalone performance, Just want to walk you through what we're expecting in terms of the consolidated performance. We're expecting 825 crore rupees by way of the consolidated net profit, 724 crore rupees versus 494 crore rupees. Just want to watch out and see what the consolidated picture is like. That should be just out any minute from now. But yes, like Nikunj is saying, best to actually ignore these standalone numbers and move forward. And more importantly, the street is going to be reacting to the management changes.
Oh yes, that is the most important thing. You know, how the DNA of the company will actually change. Because Vineet Nayyar is one man, which to my mind was really instrumental in HCL Technologies' turnaround. Now, HCL Technologies, if I map the stock has been a marked outperformer in last 1 year. I mean, the stock got re-rated. We saw strong P expansion in HCL Technologies. Now, Infosys and TCS, they've raised the bar. So for HCL stock now to outperform, the numbers really have to be special. But I doubt it very much that they can really surprise, or they can, they can continuously surprise analysts and, fund managers on the upside with consistent delivery. Everything is cyclical in nature, and Infosys is going through a downtrend. HCL is going through an uptrend, but can they really maximize on that uptrend on such a high base? That's anyone's guess. Ankita Somani, research analyst with Angel Stockbroking, she will join us in 30 seconds, and I'm sure she's also trying to digest the fine print because we still don't have the consolidated number. The PAT standalone is at 724. Sales for the quarter gone by standalone again is at 2766. Ajay Bodke joins us. Ajay, I'll take my chances with this one. Have you looked at the HCL Technology numbers? Because I only have the standalone numbers. You had of research, you will have more access.
Yeah, no, I think I've not had a chance, to look at the numbers.
So once numbers come out, or once you get a chance to look at those numbers, what are the 2 or 3, variable parts you would like to track with the magnifying glass?
Yeah, I think we would be concentrating on the volume growth. We are expecting around 2.4% quarter-on-quarter growth in volumes for the second quarter FY13. We'll also be looking at the pricing trends, and we are expecting the pricing to remain muted. We are expecting a margin erosion in the quarter by around 88 basis points. We are expecting a margin of 21.3% in this quarter, vis-a-vis 18.5% in second quarter FY12 and 22.2% the same quarter last year. We are expecting a positive commentary from the management on demand environment, and also we'll be looking at the growth outlook for the remaining part of the financial year. We're also looking at the commentary on large project ramp-ups and on the cash flow situation in the current financial year.
Okay, the dollar revenues from HCL Technologies have come, and the sequential figures, they stand at $1154 million. That's an uptick of 3.6% on a sequential basis. The expectation was that of about 1142. So these are just about flattish numbers. And of course, it's a comparable of 1113 that we are currently working with. Just want to walk you through some of the other numbers as well, and let's see. Okay, the net profit as well has come in, 177.5 million versus comparable of 161. The QOQ expectation in terms, in rupee terms, was 825 crore rupees. So we still have to convert this 177 million figure into rupees, and just awaiting some more details in terms of how the performance has actually shaped up. But these look like very flattish numbers.
Yeah, flattish set of numbers. I would also like to, understand what is happening to the EBITDA margins. The reason why HCL Technologies has been an outperformer is because in last 2 or 3 quarters, the operating profit margins or the EBITDA margins for HCL Technologies have really appreciated. I don't think there is a lot of upside left in HCL Technologies based on these numbers, because these numbers are marginally above estimates, or I would say they are in line with estimates. Markets, they always derate or re-rate a stock when they get a surprise. So Infosys, they surprised everyone. The stock got re-rated. TCS, they surprised everyone with solid set of numbers, and the stock really got re-rated immediately after numbers. With HCL Technologies, I'm afraid that surprise is missing. Ajay, broadly, would you agree with my assessment that Infosys, they surprised and the stock got re-rated? That surprise factor, at least from these initial numbers from HCL Technologies, is missing.
Yeah, I think I tend to agree with you. insofar as Infosys is concerned, the market was excessively pessimistic on the quarterly numbers. A lot of funds were underweight on Infosys, and as a result of which